What did Uber and the 2017 film Justice League have in common? They both had huge revenues, yet no profits to call their own. Let's start with Uber, everybody's favorite taxi service. Until 2023, Uber was consistently earning billions of dollars in revenue, but also had billions more in expenses, and therefore it was losing money. The Justice League movie of 2017 earned more than $650 million, but all its expenses turned out to be much more than its earnings, making the movie a loss-making project. Uber still makes enormous amounts in revenue, but now it makes profits too. For example, it earned revenues of $43 billion in 2024, but it also made a profit of $9.8 billion in the same year. Justice League, on the other hand, was a financial failure for its producers. Revenue is the total money earned by a business. It's also called the top line of a business because it appears at the very top of a company's income statement. Revenue could come from sales, subscriptions, etc. But revenue does not come on its own. There are expenses incurred by a business to be able to earn revenue. Expenses such as cost of raw materials, wages, rent, taxes, etc. After paying for all the expenses that were incurred, what's left with a business is its profit, or net income. This is also called the bottom line, because it appears at the bottom part of a company's income statement. There are layers of profit. Gross profit is revenue minus the direct cost of the goods or services produced. Let's take an example book business. The Bookworm Company earned $1 million of revenue from book sales. They had bought these books at a cost of $700,000. Thus, their gross profit was $300,000. Operating profit is gross profit minus operational costs, such as rent, wages, utility bills, etc. Let's say the operating costs were $300,000. So then, operating profit was $0. Net profit is what's left after all other expenses are deducted. Other expenses such as taxes, loan interest, etc. Let's say all other expenses totaled $20,000. Then the net profit was negative $20,000, meaning it was actually a net loss. Sometimes revenue is confused with actual success, but if your expenses are out of control, you can earn millions in revenue and still be broke. So, to get the real picture, calculate the profit margins, meaning the amount of profit made on every dollar that was earned in revenue. That's profit over revenue. Higher margins give a business better resilience to withstand ups and downs. For example, Apple in 2024 had a healthy profit margin of about 24% due to a net profit of $83 billion on revenues of $391 billion. To understand profits, one should also look for any misleading gains, such as temporary boosts in revenue. For example, Tesla turned profitable in 2020, but analysts noted that the profits did not come from core operations. Profitability was made possible by the sale of its regulatory credits, which brought in over $1 billion for Tesla that year. Overall, revenue shows size, but profit shows health. Big revenue may make an impression at a party, but profit is what keeps a business alive and sustainable in the long run. Drop a dollar emoji in the comments if you liked this video, and remember to subscribe.